Very good evening, friends. I'm Nalnakshi Swami. Welcoming back to my smart channel, Smart Indexite. I'm going to explain you a gap up. That is a simple understanding. You need to understand that. Here in the Nifty open gap up, market opens with a gap up. This shows buying strength in the market. That's what happened in the market. It was a buying strength in the market. First reaction after the open, you can see sellers try to push the price down. This is called responsive selling. Responsive selling. That's what happened in the market on Nifty. The buyers gap up and it moved higher little bit and then it started coming down. Sellers try to push the price down. This is called as responsive selling. And price moves against the buyers for some time. See, after the gap up, there were buyers and price started moving against the buyers for some time. They buy immediately at the open. The traders do the mistake because they buy immediately at the open just because there is a gap up. When price falls, first fear comes and they exit early. That's what happened to the people. Many people do that and they keep stop losses and stop loss will go off. Smart way to trade a gap up is wait and observe the first 15 to 30 minutes. Let the sellers finish the attempt. When price again starts moving up, here after 215, 230, the price started moving up. Buying resumed, then only you have to enter long. So what you need to do is stop loss placement, place sell stop at the gap fill. You have to place a stop at the gap fill. Gap is filled. And then you have to, if gap gets filled, the gap up idea has failed. Exit. So this is how you need to do that. With my indicator, I am going to show you the indicator over here. Let me change the time frame to 15 minutes. Let me remove this. Okay. Here you can see what happened to the market over here. This is the option zone and this is value area high of the monthly value area high. The price exactly reacted. I messaged in the group that price is going to get resistance around this area. Because the sellers were active from this area, the market broke down from this area. So exactly market started reacting after one or two candles. To the third 15-minute candle, it could not sustain. If I zoom it, you can see the value area high and value area low of the daily. This is the value area low of the daily and the price started falling below the value area low. Then price, this was an gap up and sellers started selling the market. sellers started selling the market, you could have taken put option, utilized this opportunity for selling, and price came down. This is the point of control. This is the daily point of control, and it is the option zone where market came down. It took lot of time to get accepted. So market halted in this area below the option zone, and it started moving sideways. In this area, price started getting accepted and buying the initial direction of the market, gap up. This was the direction, and this was resumed over here. So this is the time you need to enter into the market. And here you can see in this area, let me remove the drawings. Okay. And price started climbing above the value area high. This is value area low. Price broke down below the value area low, and the option zone price here at this time around 230, it started move around 215, around 230 market started moving. This was an initiative buying started in the market, and the market direction resumed. So many times it happens like this, and live market I'll show you the same thing which is happening in the stock Google, same type of price behavior. 1 minute. Let me go to the stocks. Let me type in Google. See, you can see same type gap up, same situation as Nifty. Let me change it to 5 minutes. 5 minutes. The initial buying, initial gap up, and sellers are active over here. So you have to wait for buying in the same direction. Maybe it can come over here and fill the gap, and this is the point of control of the monthly. Let me mark the point of control of the monthly in the Google. And this is value area high of the weekly, and this is value area low and options value area low of the weekly. This is the range, and the option zone low. The price is coming down, same situation, same presentation, same type of price action. So what happened here? Gap up, market opens with the gap up. This shows buying strength in the market. First reaction after open, sellers try to push the price down, called responsive selling, and price moves against the buyers for some time. It has moved against the buyers for some time. Now still it is not reversing. It is one candle. We need to wait for the value to develop, where market has to find the value. And in live market, it is showing how it is bending. You can see this is an important observation. When value area high is coming down, this is an observation that itself tells market is going to go down. Market is going to go down, and the both of them will come down. You can see how the value area high is coming down, receding. Can you see over here? This is an indication. Don't go long. You have to observe in the market. This is a very beautiful indicator. Market memory POC. Same type of presentation as was presented in the market. So if it is an opposite thing, if it is a gap down, immediately it will be responsive buying from the traders will be there, and you need to wait for the direction to resume. So responsive buying has to stop when it gaps down, and then it has to resume the direction. Now, and it is responsive selling from the sellers, what is happening over here, and at one point of time, it may find the value and market may come down. Market may start resuming its initial activity to the upside. Okay, friends, this is what I wanted to explain you with the context and with the price action. You need to understand how to trade the gaps, whether it is gap up or gap down. You need to wait for the responsive sellers and responsive buyers to act. They have to finish their activity, then only you have to enter into the market. Thank you very much. With the indicator option zone, you could have taken Google, the put option. Let us say, I don't know whether options are very active in the American market. Let me check what is happening. 300 put option, 23rd January. 23rd January means it is going to expire on tomorrow. Let us check what is happening on the 300 put option. 303, 270. There is no 300. Yeah, there is 300 put option. No liquidity is there in the market. I don't know. Many times I've observed there, not much liquidity in option side. Probably most of the option market are selling options, I believe. Anyway, I don't want to go into the options or anything in this market. Just I explained you, let me go to the stocks. Just I explained you the concept of gap up and gap down. What happens? What is the reaction? These are the sellers active over here, and direction has to the upside has to resume. It may fill the gap and it may finish. Then buyers in that direction has to resume. Now you can see the area is becoming the value area high or approximating with each other, and the point of control is forming. But this is not immediate reaction. Immediately it will not go up. It has to find its value. Repeated price time will be spent. From here it has been, this is the point of control from where imbalance has started over here. Now it may come down. There is a point of control over here. This is a monthly point of control and daily point of control from the previous day, and you need to wait. You are not going to act on this. Okay, friends, thank you very much, Nalinakshi Swami. I hope you understood what is the concept behind gap ups and gap downs. So you need to wait. Who will be active? So responsive selling is active in the Google. Same thing which happened in the Nifty also. Only directional buying started around 230 to around 215 to 230. That was a huge move. Okay, friends, thank you very much. Nalnakshi Swami signing off.